Welcome to the Lady Landlords podcast, where we empower women to gain financial independence through real estate investing. I'm your host, Becky Nova, founder of Lady Landlords. If you're ready to buy, manage, and grow your real estate portfolio, then let's get started.
Welcome back to this week's episode of the Lady Landlords podcast. Today, we're going to be talking with James Brown from Real Home Solutions, all about a couple different options that may be new to you. So stay tuned to hear about what those are. James, how you doing today?
Fantastic. This is going to be fun.
Good. Thank you so much. I really appreciate you giving up your time and spending your time with us to help talk about some different concepts with our ladies here today. So first question I always ask people is, I just love if you would spend a minute or two just introducing who you, James the man, is behind the real estate.
Well, I was born and raised in Alaska, which is always interesting to share. Grew up hunting, fishing, skiing, snowmobiling, all that stuff. And I've always been like an action sports guy. So every sport that I'm into requires helmets. So my body's taken a toll over the years from all that. But now I live in Colorado, kind of continued with my adventurous lifestyle, and I'm in real estate now.
And do you find that like a contact sport as well? Do we need helmets for real estate?
You need it for your brain. Definitely.
Right. Some days it feels like we might need to.
Yeah. There's a lot of mindset to be able to handle this business.
Right. Now, how did you end up in real estate? Was that something that you always wanted to kind of dive into when you were younger? It seems more that you'd be, rappelling down the side of a mountain instead of in real estate.
Yeah. Well, I was a graphic designer for 25 years. That was where I was, but it wasn't getting me to my goal of retirement. So I was starting to get into real estate. I got really serious about 6 years ago. Before that, I knew that I wanted to do that. And, I didn't buy rentals right off the bat, but I at least bought a house, and was able to leverage that. Like, I'm thankful, that I, at least got into home ownership and was able to leverage that, because it's helped me start my business, my real estate business, and I've learned a lot along the way there.
So it was your own personal purchase of real estate that kind of took you down this path of real estate investing?
Yeah. Well, I always knew that I wanted to get into it and, leverage my house. Well, I've owned a few different ones. Like I bought one with my brother and then I had my own. And then 08 hit. I bought it in 06, and then 08 hit. I'm like, oh no, I have like no equity. I can't leverage that. But,
yeah.
Obviously the market turned and there was equity there that I was able to use. And I thought, well, I'll do the normal thing. Keep my primary, I'll go buy another rental, 20% down. And it took me a while to figure out that wasn't what I should do at the time. Partially because the house, it was cool, but it was in not a nice neighborhood.
Okay.
It was old. It was 1936 brick ranch. Cool property, but boy, there was a crack in the sewer line I knew about when I bought it. Electrical was all old. It wouldn't have made a good rental if I kept that as a rental and then did the kind of nomad investing where you keep one property, then go get another one as your primary and keep those loans in place, which is amazing. Like, if that's all you're going to do, you'll be fine, as an investor. But
it just wasn't for you.
Yeah, you have to keep moving. Yeah. And I just didn't want to keep that house as a rental. I mean, we had gunshots. Somebody tried breaking into my house.
Oh, wow.
The list goes on and on. I could tell some stories, but I was like, I just need to get rid of this house and move on.
And that was in Colorado?
Yeah, here in Colorado.
Okay. So we decided to sell the house that was getting broken into and shot up. Probably sounds like a pretty good idea.
Yeah.
So when you sold that house, did you buy something different or did you kind of change strategies at that time?
I sold that in 2019. I'm just living with a friend right now, building the business, and then I'll go buy something at some point.
Gotcha. So
Yeah.
what is then your expertise within real estate investing?
Well, that's been quite a journey too, because I started listening to like Bigger Pockets podcasts, reading books, going to seminars and stuff. Dove into multifamily, was in a mastermind group for that for a long time, which is another great strategy. It's a little more complex. There's a lot more to it. You gotta have a team. And then I got into kind of the traditional way of doing lease options, rent to own, what you call FSBOs, for sale by owners. Find ones that are willing and able to lease with an option to buy to somebody like me, and I go find a good buyer for them, and put a deal together. But you have to find people that are able to wait. Most for sale by owners are selling because they need to cash out. You know, they can't wait 1, 2, 3 years. And most don't want to, even if they can. And if you're calling them like that, the strategy I had, calling them, cold calling, and they're like,
Yeah.
who are you? What is this weird scam you're trying to run on me that's complex? It's an uphill battle. So what we do now is a lot easier.
So let me just talk about then what you were doing, so that way we can then kind of get into what you are doing now. So at the time, you used to be calling for sale by owners, right? And then you were the broker between them and then a buyer to be able to place them in a rent to own situation.
Yep, exactly.
Gotcha. What made you go with for sale by owners?
That's just what we were taught in the very expensive mentorship I went through. Strategies, but that's kind of like the kind of anchor strategy.
That was kind of the gist of what you had taken from that program. And then it sounds like you kind of got into it and then realized it kind of sounds like that infomercial where it's like, well, there's got to be a better way, right?
Yeah, exactly. And it can be done. It's a numbers game.
Right.
Helps to like hire a VA, somebody to kind of do the heavy lifting in that scenario. And then admittedly, I was not good on the phones.
Yeah.
Trying to explain it to people, be convincing and build that trust. I sucked at
it. Gotcha. So not for you. So then you realize like you spent a ton of money in this mastermind now. They gave you a strategy that it sounds like this really didn't fit with your own personality type and the things that you actually enjoyed here, right? Being that like sales kind of guy. So how were you able to turn that around and make a business out of something successfully in that area?
Well, we learned a better way. So you want me to dive into what that is?
Yeah, I would love to.
Okay, so what we do is we find tenant buyers. That's the person that can't get financing. Find them first. And then what we do is match them up with an investor and go buy a home for that tenant buyer just off the MLS most of the time. We find something off market, we can do that too. So that's the main strategy.
Gotcha. So you have that tenant, that buyer, well, let's just call them a tenant in this situation because they can't get that financing. It sounds like they're just not they're not a person that could just go to a traditional lender, be able to get their own mortgage. So you kind of end up coming in to help them out with that. So what is your screening process for these tenants?
It's basically like going to a lender. Like we pre-screen them, ask a lot of the basic questions like how much money do they have saved up? What are they paying for rent now? What could they pay if we were to help them buy a house? What's their credit score? Just dive into what's holding them back.
Right.
But the key to what we do for success for them to actually buy it is get with a lender. So we partner with a lender, either one we know or one that the tenant buyers knows, or, you know, it can be any lender, but we need to figure out what that game plan is for them to buy in the future and make sure it's feasible, right? And also figure out how much time that might be. Most of them are 1 to 3 years.
Okay.
With a minimum, with our program, like a minimum of 12 months, 12 months and 1 day, so that the investor doesn't get hit with short-term capital gains. Because
Gotcha.
like flippers, fix and flippers, they get hit with short-term capital gains that cuts into profit when you're paying that extra tax, you know.
Right. So okay, so now you find the buyer, but really the most important thing is that they might not be ready today, but you need them to be ready in a minimum of a year and a day.
Yeah.
But really maximum of 3 years. And you place them or make sure that there's a conversation with a lender that says, hey, I can't help this person today, but if they raise their credit score, lower their DTI, whatever it may be, we could help them in the future.
Exactly.
Right?
Yeah.
Gotcha. Are there any minimums that you personally look for with some of these tenants? Is there somebody that like you just won't touch, or do you leave that to the lenders?
It's both. Yeah. We're looking for people that have about 10 to 20% to put down, which
Okay.
is a significant amount. You know, $500,000 house in Denver
Yeah.
is again. So we can be flexible on that. Just need to find an investor that matches with, you know. We always have a conversation with our investors, like, what's your goal? Like, is it monthly cash flow? Do you want more down, less down? Because the money that they put down it's a non-refundable option consideration. So that's paid to the investor. They're just holding that for when the tenant buyer goes to buy. And just kind of dig a little bit deeper. So the 10% minimum, I like that number because they basically prepaid to the investor enough so that they've got at least a 3.5 or 5% down payment and closing costs. So they're not having to save up over time so that they've got that money, you know, when they go to buy. Other programs don't ask for much down, but they'll put them into a rent credit program. So what that is basically a forced savings plan. It's like extra 100, 200 over market rent that they're setting aside for that buyer so that they've got that money when they get their loan.
Right. So what you do is you're really looking for people that kind of already have those savings on the side and have that organized, rather than a tenant that maybe isn't the best at saving. So then instead of renting something at $1,500, they're going to rent at $1,700, and then that extra surplus of that $200 would go into that forced savings. That's not what you guys do here, but that's more of the typical rent to own you hear about.
Exactly.
So the tenant actually then would be paying that 10% down payment up front to really secure that housing moving forward.
Exactly. Yeah. Yeah. And I look at it like, for the investor, it's insurance for them, you know, and it's
Right.
getting in the game for the buyer. So, you know, the other cool thing about that, so, you know, when you go and buy an investment property that's not your primary residence, you're basically putting down 20% or more
Right.
down, right? Well, if that tenant buyer is paying 10% or more, your net down is going to be half what you normally would do. So the amazing thing is, like, you could do 2 deals at a time, where maybe normally you only had 20% and you're stuck with that 20% in one property. This way you could do 2, and that's what our investors do.
So now you found your tenants, right? They're coming in, you've qualified them, you know that a lender will lend to them if they meet certain conditions in the future, right? And you just keep your fingers crossed that works out that way. They put down at least 10%, but that 10% is then paid directly to an investor. So how do you, what are those that are your investor kind of list? What are those people really looking for? Because it sounds like then it's not a buy and hold if they're planning on selling the property in 1 to 3 years.
Yeah, they're looking for ROI, really, cash flow. Like we try to build in cash flow. My
Right,
job is finding a good balance, like what's acceptable to the tenant buyer, what's acceptable to the investor, finding a good balance so everybody's happy. But the
right,
investor obviously wants to make some cash flow and then back end payday when they purchase the house. And so what's cool is like it's all set up ahead of time. So imagine, with a regular rental, you go buy one, you're guessing at what the rent might be, and you don't have
oh, I
a
don't.
well, you don't,
No, I make sure to do my homework to know what that rent's gonna be.
right? But it's still a guess, right? You don't know exactly. Well, with what we're doing, we've already agreed to an exact rental amount per
Okay,
month. It may go up each year, $50 or whatever. We figure that out ahead of time.
right,
So before you even buy the property, what you're gonna get for rent. Um, the purchase price in the future, and you're gonna have a tenant and no vacancy, because as soon as you buy it, they can move in, right? You're not
right,
having to try to find somebody. Not that it's been hard to find a renter in this market, right?
right.
Yeah, inventory is just low.
So really for then the investor on that side, they're coming in, they know that they're gonna have 100% vacancy for that time. The rent is agreed upon throughout that tenancy. There's an agreed upon sale price. Is
Mhm.
there a time frame that's also given? Like, okay, this transaction will take place in 1 year, 2 years, 3 years, that type of thing as well?
Exactly, yeah. So we figured that out ahead of time. That's why working with a lender,
Mhm.
they've got a really good feel for, you know, how long it's going to take and what it's going to take. So I like to have them give them a thumbs up or thumbs down or the maybes, whatever their opinion. Um,
Right,
so, we like to give them plenty of time. So if all they need is 12 months, we typically most of ours are like 2 years with an option to extend into a third year.
okay,
And it's kind of up to the investor whether they maybe charge a 1% fee for the privilege of extending, or they might just
okay,
take it for free. I mean, if they're paying the rent and you're making cash flow as an investor, yeah, why not? Let them keep going,
right.
you
So
know?
the upside for the investor is that really they're making that cash flow for that time, which we would think would have a better rate of payment because that tenant has that invested interest that they're buying the property, right?
Mhm.
Then on the other hand, they're also hoping that when they sell the property in that 1 to 3 year time period, since it's an agreed upon sale price, they're also looking for kind of that quick flip of money, right? Where maybe they bought the house at a lower price, they're now selling at that higher price. So then they're really also banking on that difference between sale prices over that 1 to 3 years.
Exactly. Yeah, and
Gotcha.
what we do, we like to make it equitable. So as an example, the Denver Metro was going up 18%
Right.
every year. So we were doing like less than half of that appreciation. And the ROI is still great for the investor. And if the market, which we are seeing, starts compressing, there's still some room there. So that, don't get
Right.
to the end and the buyer goes to buy and they're like, oh crap, like it's not going to appraise, or that's not a good situation. So we try to avoid that. And if
Right.
it just keeps going, there's some equity being built in
Within
there.
that. Okay. What? Okay. So now I understand now the benefits of this, but I'm going to now talk about all those crazy things that could possibly go horribly wrong. And I want to see what happens in those situations.
Yeah.
Because this is what I would think about as that investor. So you touched on too, like rental market clearly has changed over the past 2 years in ways that I don't think anyone could really have predicted. I don't think anybody saw worldwide pandemic coming our way. But since that kind of changed things, is there those numbers are already locked in, right? So there's no availability then kind of go back and say, okay, well now this person's rent is kind of lower than market. We need to change that. That's something that now the investor is locked into with what that rent is, correct?
Yeah. Yeah. It's kind of a
Gotcha.
agreed upon scenario where it could go either way,
Right,
we all take our best guess.
right.
Yeah.
What happens when a tenant moves in and now there's a problem on the property, right? Boiler breaks, the roof needs to be replaced. Who takes care of those responsibilities?
Yeah, we figure that out ahead of time. Generally, we have maintenance, kind of day-to-day maintenance handled by the tenant.
Mhm.
They agree to that because they want to be the owner and they picked out the house. And
Right.
that's a nice thing for the investor. Whether that would hold up in court is a different story, but we're all kind of in this together and know what the plan is.
Right.
That's another nice thing. Like investors don't have to be taking calls like you normally would with a rental or pay for property management.
Right.
Roofs, things like that, the big stuff that'd be covered by the investors
Okay.
homeowners policy, right? We offer them the option to get a home warranty to handle other things.
Mhm.
And then yeah, say the furnace goes out. Well, might be an equitable thing for both sides, the tenant buyer and the investor, just split the cost, get that fixed, and tenant buyer is going to benefit when they buy. If they don't, the investor does. So
Right, because I was gonna say, there's a point where like, as an investor could be like, well, I'm selling this house, I'm gonna buy the crappy one, the cheap one, the used one, versus the tenant that's like, well, this is gonna be my house, I want a brand new one. So is there ever like kind of conflict between those two?
as far as the purchase of the property, what we typically do if they haven't already gone down the road and found a property,
Mhm.
just have them pick something out, off Zillow that's like in their price range in the neighborhood, whether it's move-in ready new or whatever condition, and
Yeah,
then we basically take that and find an investor that's like, yeah, I like that purchase price, the area, you know.
so
So
would the investor be more than of like a private lender in these situations? Or are they really more of like an actual landlord?
it's kind of a mix, but it's more of a, well, there's two ways of setting these up. There's a lease with an option to buy.
Mhm.
In that way, it's kind of more like a typical landlord, but without the headaches, maintenance, and repairs, and
Yeah,
the mindset of a renter versus a potential homeowner that's got skin in the game. Two totally
very
different
different.
people, totally different game. And then we can also do contract for deed, land contract, like actual like seller financing, where you actually, the investor, they're going to go leverage. Like you wouldn't,
Yeah,
even though you can buy with cash, which we've got investors that will pay cash just to lock up a deal, but immediately go put financing on it. So they're
right.
leveraging that. So like in a seller financing situation, like they've got, a loan at their rate, and then they're going to have a higher interest rate for the tenant buyer.
Right.
In that case, they're not a tenant buyer, they're a buyer, right?
Right. Yeah. Then they lose the tenant. Then they actually just get to be the buyer in that situation. Gotcha.
There's,
In that,
there's some subtleties there, like in that
right,
case, if something went wildly wrong, then you're looking at having to foreclose, where with a lease option, it's a lease with an option
it's an
for the,
eviction. Yeah.
yeah. So it's,
Interesting. In that like kind of first scenario where you were saying that where it's more the tenant buyer, right, kind of coming in, and they would put down that 10%, whatever that may be, what happens if one, they stop paying rent, and two, what happens if they can't get approved for a loan?
right. Well, first of all, going back to how we work with a lender,
Mhm.
that's really the key. in totally shifting the outcome, right? Compared to rent-to-own's been given a bad name by people or companies intentionally or unintentionally putting somebody in a bad spot.
Right.
Usually it's like the other big companies that I can work with them, anybody could work with them. They don't require as much down.
Hmm.
They don't have them get with a lender. That's a big key. Like
Right.
if everybody's guessing like what they need to do, that's not a good situation. So even if I work with some of these other companies with a
Right.
buyer, I'm like, look, we're gonna go get with a lender because that's protecting them, that's protecting me and my
Right.
reputation, right? And the lender and everybody. So that's kind of the key to just avoid that problem. So I know like um, industry wide, I think close ratio is like 15 or 20%. It's like,
That's a close ratio.
yeah, how many people actually buy? That's terrible. No wonder it's
Yeah.
been given a bad name, right? But like our partner in Minnesota, he's been doing it for over a decade. He was a lender prior, and then he's been doing this business for about 10. Over 85% of the people are able to buy with the way
Wow.
you do it. Yeah.
And it's really that relationship with that lender.
Yeah. Yeah.
Okay.
I'm just making sure those tenant buyers are on board, that they understand, hey, these are the check boxes you need to check, and this is what you have to do that. So
Perfect. Okay, that makes sense.
yeah.
So you're not seeing definitely then as many defaults as you were. And then what happens with that like 10% down? If all of a sudden they stop paying their rent along the way or can't get approved, is that then, does that money stay with the seller or the investor?
Yeah, the investor keeps it. I mean, it has nothing to do with their amount that they're paying for rent.
Right.
The other thing, like, you know, I always find out how much money they have in addition to the 10, 15, we've had people do 15, 20% down.
Yeah.
I want that to be all they have. I want them to have some savings cushion. And that's another thing, you know, if they're on fumes and they're getting by month to month, that's not a good situation for them,
Right.
especially if they've got that money, you know, at risk. So
Right. Then they're literally putting themselves in like a paycheck to paycheck kind of scenario. And that's not a good
yeah,
candidate at
that,
all.
that's not good. And, you know, kind of going back to who's ideal for this, well, we didn't really touch on it. There's a lot of different reasons why people can't be qualified, but self-employed people, business owners, they'll have money to put down, but
Right.
writing off everything on their taxes, not claiming enough income to the detriment of them buying a house, right? So
Right.
all they really need to do is flip the switch on that and start claiming income and paying taxes, at least for a couple of years till they can get their loan. So that's an ideal one. All they need to do is do that, and they just need time, right?
Exactly. They just need the couple of the years of some bank statements here that are a little bit less deductions all over the place. So
Exactly.
that
Yeah.
makes perfect sense.
Yeah. And
Because
then,
that's right. Like when you look at really like tenant situations, there are a lot of people that could be better applicants, but they just don't necessarily fit in a box that most lenders just kind of need to check off things with.
yeah. Yeah.
Gotcha.
Yeah. And then there's
Um,
a lot of reasons why people have bad credit. Ideally, it's, you know, life happened. They went through a divorce or had a death in the family, or, you know, medical bills, things that threw them off. It just, something happened to them and it's fixable, right?
right.
As opposed to somebody that's just been bad, like not paying their car payments and credit cards, you know, that, like I've seen credit reports, pages and pages, like that they're probably not going to change that. That's a habit, you know, and an attitude. That's not who we probably can help or should help, you know?
Right. Somebody that had a life event, some type of medical issue, and now all of a sudden that really changed their financial situation is very different than somebody that just has chosen not to pay their car payment or their phone bill.
Yeah.
right? So no, very, very different when it kind of comes. And once again, those are both affecting somebody's credit dramatically, but they're for two different reasons. So it sounds like you really kind of look at an applicant as in a very holistic approach to
Mhm.
see how you can really kind of help them.
Yeah. And look at the whole picture,
Right.
some of the big companies, they have their box that they live in, and that they don't vary. Like
Right.
they've actually, the two big ones have raised it from a minimum 550 or 580 credit score to 620.
Mhm.
So we can help people that are under that as long as it's fixable.
Right. Gotcha. And that's once again kind of goes back to that relationship with the lender kind of along the way, not just kind of like a, hey, you need to fix your credit. Okay, good luck. Talk to you in 3 years. So
Yeah.
that makes a difference. Now, would you say that you represent the buyer side, the investor side, the tenant side, or are you kind of really the broker for both parties?
It's both. I'm trying to find a balance, make everybody happy, right?
Yeah.
But like in our contracts, we do have a space for an agent or attorney to sign for the investor and one to sign for the tenant buyer as well. And a lot of our leads come from other agents.
Okay.
They'll have them look over the contract and sign. Or if they want to hire an attorney, we've had an attorney or a tenant buyer take our contracts to another attorney. We get a call like, oh, I didn't even realize she was doing that, but it was actually a good thing, because he's like, okay, she's a little crazy. She wants all this stuff changed to really weigh it towards her side. He's like, here's what I would suggest. Like, let's do this, and this. It'll be nicely balanced. So it's balanced for both sides.
Right. I mean, listen, attorneys are not cheap. I think we all know that, but they are the necessary evils sometimes. And the whole point of having an attorney is to really protect that party that's hired them. Right. So that's actually really, kind of smart of her to go and say like, hey, actually, I do want somebody that's going to be looking out of my best interest. But clearly contracts would never be signed or agreed upon if they were completely one-sided. So that's actually was a great attorney that was at least able to kind of reason with her a little bit and say, hey, listen, this isn't just for you. This kind of has to be able to, the only way the other party's going to actually countersign is if this is actually beneficial to both parties here. So,
Yeah.
gotcha.
Exactly. Yeah, we had done a deal in Florida, and I wanted an attorney there to review our contracts. And she was the one who's like, I think you should have somebody signing for both sides, just in case there's some headbutting down the road, which
Right.
hopefully that doesn't happen, but at least that's in place, because you don't want a tenant buyer coming back and saying, oh, they talked me into this thing. I had no idea what was going on. Let's have a professional in their corner. So.
No, that's really smart. So
Yeah.
then I have to ask though, how do you make money?
A couple different ways. Part of the option consideration that's paid to the investor gets kicked back to us.
Gotcha.
And, yeah, and then the buy side commission, because if we're buying off, something on market, there's,
Gotcha.
2.5%, 3% typically offered to the buyer agent, and so we can earn some of that. It gets split up. Like if the lead came from another agent, they're going to get most of that. So as long as
Right.
it's worth my while, we kind of figure out a good balance for that.
Gotcha. So then it's still kind of representing, you could still then be that realtor in kind of some certain capacities.
Yeah. And that's why I got licensed as an agent, just to help facilitate this and networking too with lenders.
Right.
And then just having a base knowledge of the business as a professional, not just some guy that has this company too. There's a lot of benefits to that.
Right. And then also you said most of the properties that you tend to buy that you place the investors and the tenant buyers with happen to be on the MLS.
Mhm.
So also to have access to that, being a realtor makes the most amount of sense for sure.
Yeah.
Gotcha. And then how do you go about kind of gaining those leads for both investors and for tenant buyers?
Investors, a lot of it's podcasts like this and word of mouth, it's funny because like, or not. So I've got an investor, and he'd just done regular rentals until I reached out to him. He was running a big Facebook group, and I asked if I could post a deal on his Facebook group. And he's like,
Yeah.
well, what's this all about? I want to learn more. So once he figured out, how it was different, he's like, yeah, I want to do one of those. So we got him into a great deal here in
Yeah.
Colorado. And then we were sitting down having a beer after that at one point, and he starts talking about another property. I'm like, oh, are you gonna go do like a regular rental thing? And that's what it sounded like to me. But he's like, oh God, no. Like, why would I do that ever again? He's like, this is such a better way. And then he turned around a little while back and bought a duplex and got himself way over his head. He's bleeding, like he's gonna lose a lot of money. And
Not good.
called me the other day. He's like, I wish I would have talked to you first.
Right, and kind of continue with the process that's working, right? Something works, no reason to make a change,
Yep.
right?
Exactly.
Interesting. So if an investor was looking to get involved in this, kind of what's their first step besides reaching out to you, of course?
Well, I mean, we have an overview video that people can watch that kind of talks about everything we talk about. There's probably some other stuff that got left out here, but it really lays it out. But then we just have a conversation, find out, how much, where, all the details, like what's most important. Is it monthly cash flow? What market do you want to be in? As an example, like a friend of mine, he's done the most investing with us within like the last 2 years. He's done, I think, 5 now, like 2, 3 at a time. And then when the people buy, he's like, give me another one, right? And initially he's like, I only want to invest in Denver. I want to be able to drive by it. But then he realized you don't really need property management, or, because the people have that skin in the game and they're taking care of the property. Once he realized that, he did do one out of state, kind of like tentatively, and now hasn't done any in Colorado. They've all been out of state, so
Interesting.
but it's good to find that out ahead of time, have a good conversation with the investor.
Right.
Their opinion may change like it did with him, but we need to know that up front to see who's a good fit, because if we know that, like, oh, we got $30K to put down and that's it, that might be only a property that's like in Tennessee, or, not a Colorado property. We know
definitely
that.
not over here in New York. Yeah.
Yeah, right. So that's kind of the process, just a discovery call, basically.
Gotcha. Very cool. Well, I'm glad I have the video that you had sent to me, so I'll make sure to put that down in the show notes, along with your other contact information, because I'm sure some of our investors are looking for something that kind of is that hybrid model that you offer, rather than the traditional kind of rental and buy and hold. So James, thank you very much. I appreciate you coming on the show today and sharing kind of just another option of how our lady landlords can get involved in real estate investing. So thank you.
Oh, you're welcome. Glad to be here.
Yeah. So if anybody would like to reach out to James, please do make sure to look in the show notes for more information on Real Home Solutions. Otherwise, before you go, do make sure to hit the like and subscribe button so you do not miss another episode of the Lady Landlords podcast. You can find us wherever you listen to podcasts and also on YouTube. Thank you very much, and see you next week for the next episode of the Lady Landlords podcast.
Thank you for listening to today's episode. If you're feeling stuck in your real estate journey, visit lady-landlords.com/roadmap to book a one-on-one workshop with me. I'll help you determine your next best strategy. Or you can subscribe to our newsletter for exclusive tips and offers. Invest with confidence. Become a lady landlord today.